To assist you in determining whether an owner of personal property is entitled to any corporate exemptions, the Department of Revenue publishes an annual list of corporations known to the department as registered to do business in Massachusetts on January 1 and subject to corporate taxation. The list, known as the Corporations Book, also includes unincorporated entities known to be treated as corporations for federal income tax purposes, as these entities are treated as corporations and are entitled to receive corporate property tax exemptions. The Corporations Book is published on the web on or about April 1 for use in the fiscal year that begins on the next July 1. It specifically identifies corporations that have been classified by the department as manufacturing corporations as of January 1. Corporations filing financial institution and insurance company returns are listed in separate database sections. The taxpayer and assessors may appeal a classification to the Appellate Tax Board, or ATB, by April 30, or 30 days after the Corporations Book is published, whichever is later. Subject to appeal, you must follow the department's designation of a company as a business or manufacturing corporation if the entity is actually a business corporation or a classified manufacturing corporation. However, you can treat an actual incorporated entity as a corporation even if it is not listed in the book. You may also rely on the records of registration and annual reports filed with the Secretary of the Commonwealth, or other evidence of incorporation or classification as a manufacturing corporation from the department, such as a manufacturing corporation certification letter. The most extensive personal property exemptions are for corporations. The corporate personal property tax exemptions are found in Massachusetts General Laws, Chapter 59, Section 5, Clause 16. In order to receive these exemptions, a corporation, whether a domestic Massachusetts chartered corporation or a foreign out-of-state or out-of-country corporation, must be registered with the Secretary of the Commonwealth to do business in Massachusetts. There are three kinds of corporations for purposes of determining exemptions from personal property tax. First, business corporations receive a partial exemption on personal property because the state corporate excise that business corporations must pay includes a component taxing personal property. Second, manufacturing corporations are a special class receiving more favorable treatment. These corporations are afforded the widest scope of exemption. The third category is made up of corporate landline telephone companies, insurance companies, and financial institutions. All corporations are taxable on their aerial and underground networks of poles, underground conduits, wires, and pipes, whether located in public or private ways. When poles, wires, underground conduits, and pipes are owned separately from the land, you assess the corporate owner of this personal property. Property, even that embedded in real estate like underground pipes, is taxed as personal property because the ownership of the land is separate from the ownership of the equipment. Poles and wires over private ways have long been taxable, but they became taxable over public ways to telephone, cable, and all other corporations in 2010. Electric and gas distribution corporations have long been subject to tax on poles and wires over public ways, as well as private ways, on the theory that all the equipment and machinery used in the course of their enterprises are part of a great integral machine. In addition to their networks of poles, underground conduits, wires, and pipes, business corporations are taxable for machinery used in the conduct of business. All other personal property, including other machinery owned by a business corporation, is exempt from taxation. Even if it is built or integrated into a structure, it might otherwise be considered part of the real estate. Business corporations are the broadest category of corporations. A business corporation is formed for profit and cannot be just a paper entity with no personnel of its own. It must be engaged in a business activity that occupies the time, attention, and labor of workers for the purpose of livelihood, profit, or gain. The courts have held that where the only discernible business purpose of the corporation is to shield otherwise taxable assets from tax, the corporation is not in fact engaged in business, it is not entitled to the corporate exemptions. In one case, the court held a corporation created by a partnership for the purpose of selling its assets to the corporation for a leaseback to the partnership and that did not conduct a business separate from the partnership was not a business corporation for local tax purposes. As we have noted previously, a partnership, association, trust, limited liability company, or other non-corporate entity may be treated as a corporation for federal income tax purposes. Any entity treated as a corporation for federal tax purposes that carries on the same business as a business corporation is treated as a business corporation and entitled to the same personal property tax exemptions. Business corporations are taxable on machinery used in the conduct of business, subject to exceptions. The term machinery is not defined by statute. The courts have said that term is to be interpreted based on its common and approved meaning. That definition is a mechanical device with fixed or independent moving parts that perform a function, or its electronic equivalent. Examples of these devices described in court cases include electronic generators, pumps, rotisserie toasters, air conditioners, typewriters, refrigerators, calculators, movie projectors, electronic data drums, and cable television converter boxes. Machinery does not include furniture, shelving, or simple tools or equipment, such as handheld saws, hammers, and other non-motorized hand tools, and simple heating devices, even if electrical. However, machinery does include electrical tools with moving parts and other devices with electronic or programmable components. Machinery used in the conduct of business includes machinery directly used by or capable of use by the corporation to carry out its business and profit-making operation. If the machinery is operable, it doesn't matter that a business is closed or the device is otherwise going unused. Specifically excluded from the definition of machinery used in the conduct of business by statute is machinery that is 1. Stock in trade, 2. Used directly in any selling, purchasing, in accounting, or administrative function, 3. Used directly in laundering and dry cleaning, and 4. Used directly in refrigeration of goods and air conditioning of premises. Stock in trade, or inventory, is the machinery that is sold or leased by a business corporation in the regular course of its business. Machinery that a business corporation truly leases to others is exempt as stock in trade if the corporation is principally engaged in leasing. If the arrangement is a financing lease or installment sale, however, the machinery is owned by the entity that acquired it, and that entity's status determines whether the machinery is taxable or exempt. Similarly, goods consigned to a business corporation are not its stock in trade, since ownership is retained by the consignor. In that case, the property is taxable to the owner unless another exemption applies. Machinery used in the selling function by a business corporation is exempt, but a machine which provides entertainment or a service that the corporation is in business to provide is taxable. For example, cash registers, credit card machines, and soda and candy vending machines are exempt because they are used in the selling function. Gasoline pumps at filling stations, video game machines, pinball machines, and jukeboxes are all taxable because they provide the service or entertainment that is the corporation's business. The exemption for accounting and administrative machinery refers to machinery used for the in-house record keeping of the business corporation. This category includes copiers, computers, and fax machines that are used for the corporation's internal functions. Machinery used to store information or produce reports or other documents for clients or customers is machinery used in the conduct of business and is taxable. For example, a computer owned by an accountant who uses it to keep the accountant's business records is exempt. If used to provide accounting services to customers, it is not exempt. Machinery that performs both in-house and income-producing functions is exempt only if it is primarily used for the in-house administration of the corporation. The second category of corporations for personal property exemptions are manufacturing corporations. In addition to their networks of poles, underground conduits, wires and pipes, manufacturing corporations are taxable for some electrical generating machinery. All other personal property, including manufacturing and non-manufacturing machinery owned by a manufacturing corporation, is exempt. Even if it is built or integrated into a structure, it might otherwise be considered part of the real estate. To receive this exemption for any fiscal year, a corporation must apply to the Department of Revenue to be classified as a manufacturing corporation as of January 1 and have been approved for that classification. It is not sufficient for the corporation to be engaged in manufacturing and eligible for certain state corporate excise and sales tax benefits. For local property tax purposes, a corporation must have actually been classified as a manufacturing corporation after application to the department. To apply for classification, a corporation must file the Form 355Q with the department by January 31. Non-corporate entities that file federally as corporations must also apply for classification since they are treated as corporations for local tax purposes. To be classified by the department as a manufacturing corporation, the corporation's manufacturing activities must occur in Massachusetts and be a substantial part of its business. Incidental manufacturing activity is not enough for classification. For a corporation to be considered substantially engaged in manufacturing, 25% or more of the corporation's activities must qualify as measured by income from manufacturing. The number of employees engaged in manufacturing and property used in manufacturing. For example, a grocery store that produces baked goods may not reach the threshold because its primary activity is the selling of groceries. Generating electricity is a manufacturing process, but manufacturing corporations are generally taxable for electric generating machinery with capacity over 30 megawatts, or is not cogeneration machinery. However, there are a number of exceptions, including electric generating machines that, number one, is owned by a corporation classified as manufacturing on or before January 1, 1996. Number two, is a cogenerating plant of 30 megawatts or less. Number three, qualifies for another exemption as a pollution control device. A cogeneration plant makes another form of energy in addition to electricity. What is manufacturing? Manufacturing is not defined in the general laws. However, court cases have defined manufacturing as a process that transforms raw or finished materials by hand or machinery and through human skill and knowledge into something with a new nature and name and adapted to a new use. For example, logging, recycling junk, publishing, food processing like cooking a pizza from scratch, or turning lettuce into a prepared chilled salad. Baking and making of dairy products and other packaged and treated foods are considered manufacturing activities. Building construction, transmission of information, breeding of animals, and chopping rocks into pebbles are not considered manufacturing activities. Many cases have been decided delineating the scope of manufacturing activity. Some of these cases have held that even processes commenced only at the very beginning or very end of a manufacturing process are considered manufacturing. For example, collecting, sorting, bundling, and compacting of scrap metal for sale to other companies for manufacturing a finished product is considered a manufacturing process. However, the mere crushing of cars for resale to a scrap metal company is not considered manufacturing. In another case, mixing of pigment and base paint at a retail store location was considered manufacturing. Cities and towns may accept a local option that gives research and development corporations the same exemptions as manufacturing corporations. Research and development includes experimental or laboratory activity, having its ultimate goal the development of new products, the improvement of existing products, the development of new uses for existing products, and the development or improvement of methods for producing products. It does not include testing or inspection for quality control purposes, efficiency surveys, management studies, consumer surveys, or other market research, advertising or promotional activities, or research in connection with literacy, historical, or similar projects. If a city or town accepts the option, then a corporation engaged in research and development on any January 1 after the acceptance is entitled to the exemption if it applies for and receives classification as a research and development or R&D corporation. The application must be made to the Department of Revenue by January 31 on Form 355RD. To be classified as a R&D corporation, a corporation must derive two-thirds of their receipts or incur two-thirds of their expenditures from eligible R&D activities attributable to Massachusetts during the taxable year. Another local option exemption that cities and towns may accept gives manufacturing corporations or research and development corporations exemptions, if also accepted in the city or town, to a single member limited liability company that files federally as a disregarded entity. As you learned earlier, LLCs that file federally as disregarded entities do not qualify for corporate exemptions, even if their members are corporations. Under this local option, the LLC must, number one, have a usual place of business in Massachusetts. Number two, be engaged in manufacturing or research and development. And number three, have as its sole member a corporation that applied for and obtained classification by the Department of Revenue as a manufacturing corporation or research and development corporation. When determining whether to classify the sole member, the department takes into consideration the attributes and activities of the disregarded LLC as well. The last category of corporations for personal property exemption purposes includes incorporated telephone companies, financial institutions, and insurance companies. In addition to their networks of poles, underground conduits, wires, and pipes, these corporations are taxable for machinery used to manufacture or to supply or distribute water. Note that DOR centrally values the taxable networks and machinery of telephone corporations providing landline telephone service. Central valuation will be discussed in Lesson 5 of this module. Financial institutions include banks, mortgage, credit card, and other lending companies or institutions. They do not include credit unions, but another exemption makes all their personal property exempt from taxation. An insurance company incorporated in another state or country only receives the insurance corporation exemptions if the incorporating state or state of the principal place of business in the United States, if incorporated in another country, allows similar property tax exemptions for Massachusetts insurance corporations. As with other unincorporated entities, unincorporated telephone companies, financial institutions, or insurance companies that file federally as corporations are entitled to the exemptions for corporate telephone companies, financial institutions, and insurance companies. Let's review what you have learned in this lesson. In order to assist assessors in administering personal property tax exemptions for corporations, the Department of Revenue publishes annually the Corporations Book, which lists corporations and non-corporate entities that qualify for corporate exemptions. There are three kinds or categories of corporations for purposes of determining exemptions from personal property tax. Number one, business corporations. Number two, manufacturing corporations. And number three, incorporated telephone companies, financial institutions, and insurance companies. Partnerships, associations, trusts, limited liability companies, and other non-corporate legal entities that conduct the same business activities as these corporations and file federally as corporations are entitled to the applicable exemptions. All corporations are taxable for their aerial and underground networks of poles, underground conduits, wires, and pipes. Corporations may be taxable for certain machinery depending on the type of corporation. Business corporations are taxable for machinery used in the conduct of their business. Manufacturing corporations are taxable for some electric generating machinery, and corporate telephone companies, financial institutions, and insurance companies are taxable for machinery used in manufacture or to supply or distribute water. Finally, there are local option exemptions that, if accepted by a city or town, provide the broad exemption given to manufacturing corporations, to research and development corporations, or certain single-member limited liability companies.